Back to the channel, traders. It is the last trading week of September, and in this video I'll show you some of the work that I did so far this week. I'm recording this towards the end of my session on Thursday. I'll go over my two staple markets. These are Comex gold and the light sweet crude oil market. On Comex gold here we're looking at a 189 tick chart, as is the case for me for quite some time now. You can see that the initial knee-jerk reaction with the Sunday night open is to the downside. The market leaves a reference point low here in the 1634 realm and then comes right back to test the opening prices. It seems that these levels did want to hold over the course of the Far Eastern session. The market was leaning to the downside, lower highs and lower lows here on the miners. But with Europe coming to the table, the market did move sharply higher and took out the Sunday night highs. However, on the counter-directional move, it came right back to the middle. This is a classic mean reverting market. You can see that the low and a high are established, but the market keeps coming back to the middle. Here around 7 a.m. With the US pre-market, you can see that the buyers were following up here on the events from the European session, and there was a concerted effort here to break the highs left around 1657. However, a solid door emerged here in the prime time after 9:30, and ultimately just about the end of the first hour of the regular session. That's 9:30 to 10:30. Just around 10:30 you see that the market takes a sudden turn down, breaks all these long positions established here in the middle of the field around 1645, and promptly follows through to make a new lows here. You can see that by the mid-afternoon session the lows were already in, and just before the closing bell here around 5 o'clock the market closes for all intents and purposes on the lows around 1630 with a bit of frequency here that caught my eye. So beginning of the week fairly bearish. The market made an attempt on new highs here based on the Sunday night reference point, got rejected, made new lows, and then overnight in the Far Eastern session another mean reverting move. You can see these sine wave curves that the market is leaving here, coming back to the middle right around 1645 where we had the balance previously. Now however we're coming from lower prices, and by the US pre-market here, Europe had already decided to once again respect here the swap around the highs reached in the Far East. My initial idea here within this session was to go short. What I noticed here is that the same door that the market found previously is forming in this realm. In fact, I was seeing a potential lower high from Monday to Tuesday, and since the buyers here during the Monday session didn't manage new highs and we got new lows, I assumed that from the same prices with the same pattern, you can see that the market is having similar behavior here. I assumed that we're going to follow through to the downside. I did see, however, this pattern a little bit later, so I was forced into a secondary trade here rather than picking up the risk quite a bit higher in the mid 40s. You can see that my entry was just above 1643. The market made an attempt to break the proximal low here, which was that reference point from earlier in the session. However, it respected that bottom, bounced back. I had already taken out the risk completely, and I did pick up the opportunity. On the flip side, it's always tricky when you are trading in the middle of these mean reverting environments. You can see between the highs and the lows in the middle, it's very hard to know who's in control of this market. So if there's a reliable pattern, I would probably take the risk, but I also keep the opportunities on a relatively tight leash, and if the good trades don't follow up right away, I do promptly get out. I did flip the opportunity here, decided to go with the buyers in the middle of this box here. It was about a 10-point range between the 1640 and 1650 mark, and initially indeed the market was cooperating, but then promptly took out the proximal edges and stopped me out once again very close to break even. Had already taken the risk out. At this point I'm really again not sure who's in control of this market. I have a well-established support, very strong reaction and potential resistance here, maybe even moving at lower highs. Ultimately it turned out that the sellers were indeed in control, and the market did follow through to the downside. Notice however that we closed really far from the lows of the session here, so even though it was a bearish consensus towards the end of the session here, it wasn't really as dramatic as on Monday. Overnight we did manage to follow through here and find new lows in the 16, 22, 23 realm. Unfortunately, this is during the European session, and since I'm back on the East Coast, this is the time that I'm in bed, not able to participate with the market. It was a beautiful bottoming formation, but by the time I came to the table during my pre-market live session with my private group, this was not an opportunity that I could already participate with. Beautiful establishment of a bottom, robust demand here around 6 o'clock, and then the market came back to offer the long opportunity here for the turnover at a very compelling price. Would have been an absolute blast, probably trade of the week. Did not take up the secondary trade in this space here. This is a slightly larger stop than I would prefer, and also my focus was not here at this price action that early in the morning, so I foregoing this opportunity. Unfortunately, many times you cannot really spread your attention around for all the opportunities, and some are left on the table, whether by function of having to sleep or just because you are not looking, the trader is not looking at the specific events on the tape at this very specific moment in time. Strong follow through to the upside. I did pick up this short opportunity to explore a mean reverting hypothesis. You can see that the market made new lows to the Monday ones and then came right back to fill the range. I was pretty much playing the same idea here, betting here that on the backside of this frequency into a very overbought and stretched condition, the market is likely to come back towards the middle of the range. Unfortunately, I noticed that there's quite a bit of strength following my entry. You can see that instead of snapping back and filling the empty space, the market was willing still here to put higher lows and higher highs. So on one of the pendulum pullbacks pretty shortly after my entry, you can see that I was in this trade really not longer than 15 minutes, and I picked up a very small profit here, pretty much taking a graceful and deciding to not fight that much strength and see if I can potentially either go long or well, I'm usually not interested to go long that late in the progressions, but if the market has a very robust and obvious pattern, in this case here a range extension sequence where the market is stacking boxes and progressing up, I was more interested in potentially reestablishing a short idea, but at a better price, maybe later in the session. The probable path of price here was projecting that the market could run out of directional energy along this upper parallel. For all intents and purposes, that would be close to the 1670 mark, and I did patiently wait for the market to get in that realm. Towards the end of the session, when the volatility has really died down, I noticed that the market's potential here for a parabolic development late into the session actually started to slip away since we're falling behind this curve. That's why I decided to sell one of these shoulders here after it appeared that the market has really hit the wall here. It seemed like there's a lot of profit taking here above 1670, so I decided to sell in this realm and see whether the market will move in my direction. There was one more test of the top and the market closed for all intents and purposes very close to my entry point, but overnight into the Far Eastern session the market moved aggressively in my direction, so I left what I consider to be a conservative target down at this previous base where the market had found the swap and broken the Monday highs. I did get filled on this one in the middle of the night. This is hands-off management. I'm leaving the stop in the target. By the time I went to bed, I had already seen this move, so I took out the risk from this trade. So this was a free attempt on what appears to be a meaningful amount of profit. This was, I believe, just short of 4-1 relative to the initial risk taken, and I woke up here to see the profits. I could have managed a little better had I been in front of the screen, but I'll take the profits here for setting up this situation and going to bed. During the next session here, pretty much today's session, I noticed that the market is defending a higher low here in this realm and starting to show potentially the beginning of the next wave to the upside. Again, I'm late to this party, but I'm picking a pendulum pullback on what appears to be the average size pullback here within the latter portion of the US pre-market, so it appeared like a safe entry. Unfortunately, shortly after that the market goes deeper, and because I'm usually trading actively day trading, intraday trading the index or the ES market, I did miss this bottoming formation. The market took a very sharp turn, didn't stay here that long for me to notice this, and once again I'm missing a great opportunity. There was a short that I attempted here as the market got close to this well-established resistance. It appeared to me that the market reached for the highs, fell short of them, had a meaningful move off to show the selling interest, so I sold the backside of this idea. But once again, similar to the opportunity I took earlier right here in this space, I noticed that there's still robust demand and a new high. I really did not expect to see a new high had that been the actual top here in the middle of the morning session. So I moved to break even, took the graceful, and decided once again to see if I'll be offered something more compelling, potentially at a better price later in the session. And indeed, I really like this opportunity here, taken once again in the beginning of the afternoon session. The market seemed to be topping out but not able to maintain the prices above the reference point here set out by yesterday's high. So I picked up a classic 50% pullback here for the entry, and wanted to see whether in the afternoon we're gonna get that sizable mean reverting move. Unfortunately, that did not happen. See that even though the market broke the proximal edge here, the buyers that were controlling this market here from the late morning session were still in place and did defend positions. So once again, I'm taking out the risk and walking away here with break even towards the end of this session. You can see that it's really not all profits and glory with trading the markets. In this particular situation, I'm sitting on two gracefuls from the first half of the week because I traded in the middle on a very with opportunities on a very tight leash, and I did miss the actual swing. Missed here a great bottoming formation. This is pretty much the trade of the first half of the week, which was this massive extension higher. Played a hypothesis here, which I quickly saw the market disprove, so managed to once again take a graceful. So I'm sitting for all intents and purposes on very small winner here. I really don't consider these meaningful profits. These are three opportunities, three scratches. Nothing's lost, but not much is gained either. And then one hypothesis did work out here for what are ostensibly, well, with these profits, let's call them about 4 handles or 4 stops that I'm building up as a buffer towards my capital this week. And one stop was given away this morning on this potential, secondary wave that the market promised could deliver new highs. And again, missed opportunities here and there with another 2 scratches here later in the session. So not really the best of weeks, but profitable nevertheless. And happy with the rhythm which I'm able to maintain again when I'm in front of the screen, not missing great opportunities. I'll show you here light sweet crude, or the crude oil market, which is fairly dynamic as well. This one requires quite a bit more attention to the tape so that stops are maintained within reasonable parameters. Similar start of the week here with the Sunday night open leading the market, well, initially slightly higher, but then ultimately to the lows. Monday, during the prime time of the session, the market made new highs, but then got promptly rejected, and similar to gold, did find new lows by the end of the session. You can see that here on Tuesday, I once again was looking to explore a range extension sequence, buying the next higher low, expecting the market to complete the rotation close to the highs. Not the best of risk versus rewards, and similar to the gold market, I did get stopped out here. Unlike the gold market, however, I did manage to flip the script here and pick up a short opportunity once I noticed that the market got rejected here with a couple very strong bars close to the previously established door. And this one did in the post-market play out for a revisit of the bottoms, ostensibly taking out the stops of the already established long positions. You can see where the vertical move testifies for the capitulation. This would have been a good opportunity again had I been awake and in front of the screen, as from a very low price the market completed a perfect semicircular wave here during the course of the Wednesday session. Once again, very extended progression, and once again you can see that the same idea is played out here. What I noticed in order to fade the extreme here is that the market was sitting on a massive range from the session, and I pretty much bet that there will be some amount of profit taking here. You can see that we're sitting on an almost $6 low to high daily range in crude oil, and that's even for this very dynamic market, quite a bit of volatility. And since there was already a well-established pattern of a slowdown, I decided to sell this already familiar. You can see where the market had a potential topping formation here. This was a local top that the market really didn't pull back much from, but this price action here had a very similar feel since it was late in the session and we had already had a significant slowdown. It felt like heavy lifting, or In other words, the type of behavior where there's a lot of buying, you see a lot of participation, but the market's not making a lot of progress. We're already sitting on quite a few complacent buyers here, so the play here was that the risk is to the downside, and if a low breaks, the market will quickly fill the space to the next support. This is what happened indeed, and the profits were booked here, very similar to the Comex gold trade. There was nothing really that I was interested in here today, although I do believe that the market might have actually left a very high quarterly low here, and in my opinion it'll go back to at least test the highs here that are so far reached this week in the low 80s, and potentially even go higher. You can see that support established here did get defended. I managed to take my profits very close to these lows, and the market made new highs. There was a mid-morning low here, but since the market couldn't provide the new highs on the way down, all these positions here got taken out on the capitulation. But notice that the buyers who had already established their positions at lower levels are potentially playing defense. This interaction between proximal and distal layers of interest are well, usually interesting, and do often lead to the best reward versus risk opportunities when there is a directional extension in the cards. In this market here so far this week, for the 4 sessions, I'm sitting on, once again, one loss here, an almost 5-1 here, realized reward versus risk, and another 4-1 here, so quite a bit better, sitting on almost 8 handles in the crude oil market on a 40-tick stop, which again I'm controlling very tightly the risk here since the volatility is significant. And I want to be on top of my average size loser. Hopefully this quick review for trading I did in the last trading week of September is useful to show you some of the tools and methodology for dissecting the intraday market, the reference points that the market leaves behind to form certain hypotheses and approach them with a great reward versus risk mentality. I don't know if you have any questions. Like, share, and subscribe if you like these videos and you want me to make more of them. I'll catch you traders in another video on the channel.